another minor victory against precious metals market manipulation. So my channel has been covering this for a very long time. Basically since the beginning, I've been covering precious metals market manipulation. And finally, it looks like we're starting to get more progress here. And I'll put the pieces together for you guys that there may be, hopefully, fingers crossed, some people who were rolled up in the last 12 to 18 months. There may be actually people who got in trouble in the mid-level or lower-level traders who are actually willing to go on the record and testify against the big shots. And Reuters put out a story earlier this week about it. I'll talk about that in a second. But first, let's talk about the gold market. So as I predicted yesterday, at least for now, the gold market went up. So based on the Saudi news, the gold market is open. The spot market is open. I have Kitco up. And the gold market was as low as $1,487.90. And it has spiked up. If you look at a very rapid Kitco chart from the spike up, it's already over 1,500 again at 1,503. It's gone as high as 1,506 already. So it's up over 1% at a $15.10 increase as of right now when we're doing this live stream on Sunday night, September 15th. So the gold market has moved. In my opinion, this is on the Saudi news. The market is interpreting this as a pop on the Saudi news for now. Silver is at $17.68. Silver is not up nearly as much. It's up only 26 cents. And platinum is up $7 to $9.53 an ounce. And this weekend, guys, before I forget to mention this and talk about the rest of the show with the stories of the two high-level senior managers in JP Morgan being put on leave that Reuters reported, the Denver Gold Forum starts tomorrow, Tuesday, and Wednesday, I believe. So if you're looking for new gold companies, and pretty much all the primary gold and silver miners of all shapes and sizes are there at Beaver Creek, there will be presentations on the Denver Gold Forum website of about 20 minutes long. And keynote speeches. You should be able to, within normally about 48 hours, they have the free presentations, obviously because the conference is expensive to go to. A lot of the movers and shakers in the gold community go there. There should be a lot of good free presentations and research up there on the Denver Gold Forum website. Normally I watch a lot of those presentations. I get a lot of good insights by watching the royalty and streaming companies presentations and talking about financing for the gold and silver miners, new deals, etc. So if you're looking for companies, you're looking to get a leg up on some of the others, you want to do your own research, the Denver Gold Forum website will have those videos up probably Tuesday or Wednesday. So the Monday presentations, a lot of the presentations, I think Sandstorm Gold's presentation is tomorrow morning. That should probably be up maybe Tuesday or Wednesday. I will be paying a lot of attention looking for that. So now on to the main story here for the show. So 2 JP Morgan employees were put on administrative leave amid U.S. probe into metals trading, Reuters reports. This was actually reported by CNBC on Thursday. So JP Morgan and Chase placed 2 employees, Michael Nowak and Gregg Smith, on leave in response to a U.S. criminal investigation into the bank's metals trading practices. So this is about gold and silver. I mean, the banks have been fined for other metals trading manipulation with aluminum. I think the Brits call it aluminium, but here in the U.S. we call it aluminum. But, you know, the banks have always manipulated, and they've always gotten fined for different markets, manipulation in different markets. Normally it's a fine. Unfortunately, it's normally with shareholder capital, the fines. So I would like to see the bankers have to pay the fines out of their own damn pocket instead of the shareholder capital. It's just ridiculous that the banks are able to get away with that. And I did a show on this about a month ago. I'll put a link to this video at the end, and I tracked this. And I don't think anyone has done an up-to-date calculation on the total amount of banker fines since the 2008 financial crisis into 2019. The last article I found that tracks the exact amount of banker fines was from 2017, and the total was already over $300 billion. But if you go and look at the precious metal market manipulation fines, there's been I want to say it's at least 6 now investment banks that have been fined in the last 3 or 4 years for precious metal market manipulation of the paper metals markets with spoofing and other types of manipulation. So I believe the CFTC even fined the banks for not reporting accurate COMEX data, for accurate amounts of metal in their storage and vaults. That's saying that the commitment of traders data was totally inaccurate. This was 3 or 4 years ago, maybe. There was a fine for that. Hardly anyone talks about it anymore. So there's been a lot of fines along the way. Very few people have gone to prison. But in the last 12 months, though, there has been people arrested. So I talked about this on that show last month that I put out on August 22nd. Again, the link to that, if I miss anything in this show, it will probably be covered in that one or another previous show that was done a couple months ago, updating you guys on all the bankers getting arrested for precious metal market manipulation. And that show was on August 22nd. So this started, the first guy who got arrested that pled guilty to 1 count of commodities fraud and 1 count of conspiracy to commit wire fraud, price manipulation, and spoofing was John Edmonds, age 36 at the time. The story was on CNBC on November 6th of 2018, and Edmonds was a 13-year veteran of JP Morgan, and he said that he learned how to manipulate prices, aka manipulate gold and silver prices, from more senior traders, and that his supervisors at the firm 100% knew of his actions. So I was always wondering, and other people in the gold and silver community were always speculating, would he testify? Would he actually go to prison? Would he disappear? Would he keep his mouth shut? And, now that these 2 higher level JP Morgan employees are being rolled up on the investigations proceeding, we may actually have John Edmonds or this other guy that it was announced. Let's see here. It was announced, and this is why I did that show last month. The story came out on Tuesday, August 20th. Another JP Morgan trader pled guilty to spoofing and gold manipulation, and he's facing up to 11 years in jail, but he'll probably just be fined. The guy's name was, let's see here, Christian Truns, another former JP Morgan metals trader. He pled guilty a month ago to conspiracy and manipulating prices in the precious metal market as part of the U.S. government's continuing crackdown on bogus spoofing trades. This guy was 34 years old, and he's facing as long as 135 months in prison. I don't think he'll get 135 months, probably be a shorter time, and a fine. Or maybe the bank will pay the fine, who knows. But eventually, if more and more people, and this is the way the federal government works if you're not familiar with the process, as more and more lower and middle traders plead guilty to metals market manipulations, you would see in a normal functioning Department of Justice where there was rule of law, you would see the little fish roll up. So start to do plea deals and start to roll up and testify against the big shots. So hopefully we will see something like that. I'm crossing my fingers. I'm not going to hold my breath. So hopefully, I'm cautiously optimistic, we might actually see some high-level bankers maybe go to jail for this. Yeah, Ricky says the problem is not enough of them being caught. Well, here's the thing. If a couple of these really big shots, if a couple of the upper-level management or senior executives go to jail, that would send a message to enough of them that they're going to have to cut it back. So if you send a message and you don't have to prosecute all of them, you just have to prosecute enough of them to scare the rest of them to not do it. You don't have to prosecute all of them. Okay, so here's the rest of the story that came out this week. Well, last week, since Sunday's a new week. So 2 JP Morgan Chase & Company employees, including a top metals trading executive, have been placed on leave in response to a U.S. criminal investigation into the bank's metals trading practices, according to a source familiar with the matter. Michael Nowak and Gregg Smith are on leave, the source said on Thursday. Nowak is a managing director and global head of base and precious metals trading in New York for the bank, according to his LinkedIn profile. Smith's title could not be learned. Nowak was placed on leave around late August, the source said. Neither Nowak nor Smith has been charged with a crime, not yet. But it sounds like the federal government, the U.S. Department of Justice, and other agencies are actually building a case based on testimony from either John Edmonds and or Christian Truns. And maybe, just maybe, we will get more convictions. So normally with the way the convictions work is they get a low level or mid level guy. They offer, after the guy gets charged, they then offer a plea deal for lesser time in jail, and in exchange for testifying against bigger fish. So we'll see if that happens. That's normally when the Department of Justice is working correctly. This is what they did for drug deals, what they did for mob bosses. We'll see what they did with criminal charges for corporations. That's normally how things have done in the past. They get the little fish first, and then they get them to roll over. This is supposedly what the QAnon people were claiming was happening with the child trafficking. Although we haven't seen, besides Epstein, we didn't see anyone else, any of the other big shots go to prison. And by the way, there's a shout out to Christopher Irons at QTR. He's having Whitney Webb on there. Some good stuff. I didn't finish the whole thing. I was listening to it last night before bed. The second Whitney Webb interview, that was really good. I got about halfway through it. It's really good stuff. Okay, so the attorney, back to the article, attorney for Nowak did not respond to a request for comment. Of course not. A call to Smith's number at the bank was answered by an employee at the metals desk who directed questions to the bank's public relations department. Reuters could not learn the identity of its lawyer. A spokesperson for the Department of Justice declined to comment. Yeah, because the Department of Justice doesn't want to tip their hand. JP Morgan said in an August 2019 regulatory filing that it is responding to and cooperating with investigations by various authorities, including the Department of Justice, relating to trading practices in the metals markets. In August, a JP Morgan metals trader pled guilty to charges of spoofing between 2007 and 2016, after another JP Morgan metals trader had pled guilty to spoofing in October last year. So those are the two ones I'm talking about. I have the additional stories if you want to go into more depth. There are other traders at other investment banks who have pled guilty, but JP Morgan seems to be the one with the largest short position, especially in silver, the paper short price. Remember, they inherited this from Bear Stearns when the federal government engineered Bear Stearns taken over by JP Morgan. Because Bear Stearns, the short silver position, the short paper silver position, I believe it was owned by another investment bank before Bear Stearns, and then Bear Stearns inherited it, and then when Bear Stearns was about to go to zero and the federal government forced JP Morgan to buy Bear Stearns for pennies, I think $1 a share or something, or $2 a share, before it went to zero, then JP Morgan then inherited the enormous naked paper short position in the silver futures market. Spoofing involves placing bids to buy or sell to buy or offers to sell contracts with the intent to cancel them before extinction. By creating an illusion of demand, spoofers can influence prices to benefit their market positions. Okay, so you're not going to get much more out of the CNBC article. You know what? It's good that they even covered it in the first place. This is progress here. That these were even covered, that we have these three stories on CNBC. It's good that we even have these covered now. Because I remember when I got started in this, 2007, 2008, 2009, maybe you could occasionally mention that there were problems in gold and silver, but I don't remember anyone covering stories like this in the mainstream financial media. Back in the day, you could have, like, Gata used to do some interviews. Peter Schiff would do some interviews, although Peter is still adamant, I think, that gold and silver are not manipulated. He says everything is manipulated, but he specifically won't say that gold and silver are manipulated. Yeah, no high-level bankers have been jailed over the 2008 financial crisis. Thank you for the super chat. Yeah, I agree. The banks just see its cost-benefit analysis. He says the Veritas Arrow with his super chat says banks just see fines as cost of doing business. If the fines were higher, they wouldn't. But if they're paying 10% in fines and 90% of their manipulation profits are kept, then it's a good return on investment. Same thing with lobbying. The banks spend enormous amounts of money on lobbying. There's a documentary about it. I can't remember the name offhand. I saw it years ago, like 6 or 7 years ago. Really, really good. I'll have to look it up to see what the name of the documentary was. Oh yeah, it's called, I think, The Best Government Money Can Buy. It's about how the lobbying and how banks and other large corporations, they get 100 to 1 returns on lobbying dollars. So that for every dollar they spend on lobbying, they get 100 to 1 returns. So they don't spend money on research and development nearly as much. They spend money on lobbying to sabotage competition or to protect their profits, prevent prices from falling, etc. Yeah, Peter does sell gold and he wants gold to go up, but Peter also doesn't admit that gold and silver are manipulated. He doesn't like the Gold Antitrust Action Committee GATA people. It's extremely well documented that gold and silver are manipulated. I mean, look at the evidence here now that the government's pursuing this case. The CFTC going after with Gary Gensler and the CFTC commissioner before him, it was bullshit. The investigation into silver was total BS. But now it looks like they're finally starting to make some progress. Thank you for the super chat, Venchin Migtao. You still have a big ammo box full of silver, but bitcoins are your thing now. The silver didn't go to zero, though. It just hasn't, it's been capped. But now we're at a point, guys, where with the miners on the supply side, if the gold and silver paper price in dollars does not go up, and let's say it does correct and it goes back down to the levels from April and May, you're looking, the miners have not raised capital. A lot of them have not raised capital. There was only one mining company that has done a $100 million plus capital raise recently, and that was New Gold. I've talked about this, and that New Gold capital raise for $150 million, it did not go well. It spooked the Canadian investment banks, and there's not a lot of demand by institutional investors to fund a lot of these gold mining companies. So at the price levels now we have for metals prices in dollars for gold and silver miners, the operating cash flows for a lot of these miners, some of them they're pretty darn good now for some of these miners, but back in April and May, they were really, really bad, and the miners could not raise any money, and some of the miners were not making any money at all. They were barely breaking even or losing a lot of money. So if we go back to April, May levels for gold and silver prices, and the miners haven't raised any money, the miners are going to be on the brink of bankruptcy again. So it's not sustainable to cap metals prices at $15 silver for forever. Eventually you will run out of economic metal to mine. It's not sustainable to forever cap gold at $1,200 an ounce or less. Eventually the miners will produce all of the economic gold at that price. And then the price will have to go up or the supply will drop. And or the miners will go, a lot of them will go bankrupt. The other thing is, if we get a big spike in oil prices, that's going to hurt miners' margins, because about 30% of the cost for mining is oil and diesel. So if we get a big oil price spike from the Saudi news, that's going to start to, over the next quarter or two, it's going to start to really hurt the margins for a lot of these miners. Gurner Alak says he doesn't care about lower gold and silver prices because he's going to keep stacking. Yeah, it's a good attitude. It's not financial advice, just my opinion. It's a good attitude. You have a good attitude. You're not buying all of your position at once. You're thinking long term. You're putting your savings into there. It's a good attitude. The mistake most people make is they hear about the gold and silver story. They buy all of their mining stock positions at once. They mistime things, or they buy all their physical gold and silver at once. They mistime things. That's the number one mistake I hear all the time, for years now. There was a lot of people that chased silver up into the 40s, the high 30s, the 40s in 2011. And there's a lot of people that have held on to the silver and they're waiting to dump the silver. A Alexi says the oil situation, if it closed above 61, we're heading to at least 75. Well, here's the thing. Trump already just put on his, and this is the thing. Trump is well aware that a higher oil price will hurt the U.S. consumer, will hurt the U.S. economy, will hurt discretionary income. Because I mentioned this on the stream late last night, that Trump was talking, he's tweeted out many times about the oil price and how the Saudis should not cut production. Remember, he's been doing this, he's been tweeting about this for over a year about the oil prices. There's been, lately it's been about China tariffs and the Federal Reserve, but before that, before he increased tariffs last year, he was tweeting a lot about the oil price. So he was calling out the Saudis. He was saying the Saudis needed to increase production to keep oil prices low, that the Saudis needed to not cut production, or otherwise that would hurt the U.S. consumer. So he's aware of this. And so I believe today he just tweeted, I didn't check his Twitter, but one of my friends did, that he's talking about dumping the entire strategic petroleum reserve if necessary to prevent an oil price spike. How many other U.S. presidents do you think, modern ones, would have the balls to dump the entire strategic petroleum reserve immediately to prevent an oil price spike? This attack proves no installation is secure in Saudi Arabia. It will destabilize the oil market. Maybe. We'll see what happens. There's so much manipulation and crazy things that happen in the oil market. There's a lot of geopolitical stuff involved. Backdoor dealings. Sometimes you have the Saudis and the Russians working together. The Saudis, I was talking about this yesterday. The Saudis and the Russians were working together to try to kill shale. They're willing to take a lower oil price to try to kill shale. From like 2013 to 2015, they tried to kill shale, and it didn't work. They did put some shale companies into bankruptcy, but they didn't kill all of them. The majority shale companies survived because they were able to raise cheap capital and lower their costs. So occasionally there's countries working together, and occasionally there's big oil-producing countries fighting. And the Saudi, when the oil price dropped below like $80 a barrel about 5 years ago, when the Saudis were trying to kill shale, they dipped into their sovereign wealth fund. They spent a lot of it sustaining their government budgets and their social programs. So if they're going to, it's not sustainable for the Saudis if they're going to keep burning through all their sovereign wealth fund to do that. I haven't looked at Barrick in a few months, so I can't comment on Barrick. But the last time I looked at them, they were lying about their costs really bad, and they had a lot of operational problems at a lot of their mines. So their cost, the last time I looked at Barrick was maybe 6 months ago, and their costs were over $1,100 an ounce all in. I had the numbers. So their free cash flow was nowhere near the levels that they were claiming their costs were below $800 an ounce all in sustaining costs, and I was matching up the numbers, and it was nowhere near that. And they have a 5-year restructuring plan for their mine and for their mines with their acquisition when they're merged with Randgold Resources. And there was a lot of problems with the mines. So they said it was going to take 5 years or more to fix them. And the CEO from Randgold who came over, was running the company, was talking, at least last year he was, about leaving. So I don't know. In the short term, Barrick may look good, but those sound like some serious problems to me. I've disclosed this publicly. The only speculative position I have is Alexco. Yeah, in general, I don't like Barrick that much. For the larger, this is just my opinion, not financial advice. For the larger companies, I think Newmont is pretty good, Newmont Gold Corp. But they were supposed to have sold some mines off already for cash, and they haven't done it yet. They were supposed to fix their balance sheet. Sandstorm Gold's margins are fine. Sandstorm Gold doesn't mine gold. They finance it. Sandstorm Gold's margins are not going to get affected. Their costs are either fixed at a agreed upon price to buy a gold stream, or it's like 30% of spot price. So, like a regular gold miner will be affected by a higher gold price. Sandstorm Gold doesn't do that. The ounces they buy. I think the oil price is going to be a lot more volatile. It's tough to say. It's tough to say because on one hand you have the Saudi news, right? Where this should be an oil price spike, but on the other hand you have Trump who's willing to dump the entire strategic petroleum reserve to try to offset it. So how do these things balance out? Yeah, Sandstorm doesn't mine. So Sandstorm isn't exposed to the same price increases that regular mining companies are. Can't wait to see where your USO options are tomorrow. Yeah, I mean, if Trump wasn't going to, this is just my opinion, if Trump wasn't going to dump the strategic petroleum reserves, or at least threaten to dump them, the oil, there would be a big spike, maybe even limit up, which is the maximum amount of movement in a single day for the oil price. But with Trump, who knows? Trump could dump the entire strategic petroleum reserve, and we might not get an enormous pop on oil, or it might only last a couple days or a week. And here's the thing, if the US knocks the oil price down on the Saudi news to buy time, then the US could just buy back the oil for the strategic petroleum reserve. So this is just more ways, guys, that the oil market can be manipulated, is a government like the US government can come in. Trump has been tweeting manipulating the oil market. I've talked about this for over a year now. He was tweeting a lot about the oil market over a year ago, like 2017 and 18, before he started tweeting more and more about tariffs on China and about the Federal Reserve. His most economic tweets besides the stock market were on the oil market. So lately he's been tweeting less about the oil market, but now with this oil news, he'll probably start tweeting more about that. But most of his recent economic tweets were about the stock market and China and tariffs and the Federal Reserve. But before he ramped up the tariffs and anti-China tweets, he was talking about the stock market and the oil market, trying to manipulate the oil market lower anytime the oil market price went up. Yeah, the Goldilocks oil price, I don't think we'll see the Goldilocks oil price for very long. The market, if you go back and track the Goldilocks oil price, you don't see it stay in the Goldilocks oil price range for very long. And I think that has to do with manipulation. Speculators, futures contracts. There's no position limits in oil to my knowledge. Yeah, Rick, I'm aware of what the SPR is supposed to be used for, but Trump doesn't care about those rules. Trump likes to break those rules. Other presidents break rules too, but Trump seems to not really care about a lot of those rules. Which is funny because Paul Craig Roberts, I interviewed him in 2017, shortly after Trump took office, and Paul Craig Roberts was really angry with me on an interview, correcting me, telling me Trump can never increase tariffs. It's against the law. He was like, the WTO rules, the U.S. is not allowed to increase tariffs. I was like, do you really think Trump's gonna listen to gonna follow all those laws? And exactly what happened. Trump ignored the laws and increased tariffs anyway. Because the U.S. created the World Trade Organization, and China hasn't abided by most of the WTO rules anyways. Go back through history. One of the most important lessons of studying history is that governments, especially the larger, powerful governments, empires throughout history, they always change the rules. They never follow the rules. It's one of the main things about history. The Saudi thing will blow over. Nothing will happen. The wealthy elites have way too much to lose if a major war breaks out. Yeah, if we go to $100 a barrel oil, it's going to be like the Federal Reserve hiking interest rates, and it's going to potentially accelerate a collapse of everything. the U.S. economy would officially accelerate into an official government recession. We know the reality of the situation in the real economy in the U.S., but that would accelerate a recession. I outlined why oil was in a bear market. A lot of it's because of the global economy. There's clear evidence, clear data that the global economy is slowing down a lot. Veritas asks a super chat question. Do I think things will get worse with Iran? Yes, it looks that way. Trump is tweeting about that. And you have Mike Pompeo and you have Lindsey Graham. Lindsey Graham was tweeting last night about blowing up Iranian refineries last night. Mr. Neocon himself, Lindsey Graham, the protege of John McCain. When do I think the recession will hit? Well, it depends. If oil prices go up, that's going to accelerate a recession. Although that would prevent maybe as many job losses in North Dakota and Texas. Because oil in the bear market, it was looking like there was going to be massive job losses in the oil industry and the surrounding service industries around the oil towns in Texas and North Dakota. I doubt we'll ever find out who bought those options contracts. Oil is a great thing for the U.S. business. It is more complicated than that, Ryan. If oil goes too high, the U.S. consumer can't afford it, so it helps the oil industry with profits, but then the U.S. consumer then can't afford it. That hurts discretionary income. If oil goes too low, it could bankrupt the producers. So the market really needs a Goldilocks oil price where it's not too high or not too low. The problem is if you go back and look at that on the oil charts, it never lasts for very long. No, oil is not the economy, Ryan. Oil is a very large industry. Most of the US's GDP is consumer spending, 70%. If all the U.S. had was oil, the U.S. economy would have collapsed already. The U.S. has a lot of value added. You have Apple. You have a lot of technology. Oil is important, but it's not the most important thing. Most of the U.S. economy is based on consumer spending. When do I think the recession will hit? I discussed this on Friday. Veritas, I discussed this on Friday. Go back and listen to the Friday show if you didn't listen. Thank you for the super chat, a couple of them. So, if oil prices go high, that will hurt the consumer. If oil prices go lower, because they were in a bear market, that will hurt the jobs. The majority of job creation since 2008, if you go back and look up all the numbers of all the jobs data, the majority of jobs that were created were part-time or low-paying full-time jobs in restaurant and retail, and then also the oil jobs in North Dakota, Texas, Oklahoma, based on shale. That's where the majority of full-time jobs were created since 2008 from the jobs data. So if the oil market goes into a bear market and North Dakota shuts down oil wells. Oil companies go bankrupt. The restaurants, the shops in North Dakota all shut down. And Texas starts laying off a lot of oil workers. That's going to hurt the real economy. Economics is all about trade-offs. So if oil price is low, for example, if an oil price is low, that's good for consumers. That means the consumer has more money to spend, more discretionary income, more money to save if they want. Hopefully they're saving more, although not in fiat currency. But if an oil price is low, the consumer has more money to consume or to save. But if the oil price goes too low, then the oil producers go bankrupt, and then the oil workers lose their jobs. The same thing is true with e-commerce. So e-commerce, where someone was asking a question about this in the live chat section a couple days ago. I saw it later. I didn't see it live at the time. If the majority of bricks and mortar retail stores switch to e-commerce, right? So the consumer could potentially get better savings. Better prices for items they buy online. So free shipping, free returns. They don't have to spend money on gas in the car. They don't have to spend 2 hours at the mall. So they could save money on gas and other things by just going on a website and buying online. So there's benefits there to buying online. However, that means that there's less human beings being employed. That means that there's a lot of people working in these warehouses, and those warehouses are automating quickly. But if you look up the people working in Amazon's warehouses, a lot of them are on welfare or not getting paid properly. So there's trade-offs to this. So you see the studies saying that you see the study saying that, oh, retail spending was great, e-commerce was great. But then you also see the Wall Street Journal article that came out on November 10th or something. I put a link to it on Friday. It's in the information and description section. And the Wall Street Journal article was talking about the retail apocalypse, how all these human beings in retail are losing their jobs. There's been over 8,000, a record pace so far, over 8,000 retail store closures. So yes, the consumer, that's good for the consumer, but if your job was in retail, you're starting over. You're shit out of luck. You better hustle. You better either add new skills and find a higher paying job somehow, or you better find some side hustles and put a couple part-time jobs together. It's going to be tough. So that's the trade-off I'm talking about. So just because nothing is ever normally only good or only ever bad, especially in economics, there's normally trade-offs. Yeah, consumer spending has been mostly credit. There's been a big credit card increase since 2018. The last 12 months, there's been a lot of credit card increases. Yeah, it's probably smart what you're doing. Thank you for the super chat, Veritas. Yeah, so someone was asking me about the conflicting evidence about the good retail report that came out last week versus the Wall Street Journal article. And I think I just explained it, that there's trade-offs there. So if you're not working in retail, you're getting more deals online. The ability for you to consume more online at a cheaper price with free shipping and other offers, good deals, is good. You don't have to waste gas money driving to the mall. But if you're a human being relying on a job working in retail or restaurants, it's not looking good. Oh, you were the one who asked it, me. Yeah, I explained it. Yes. Okay. Yeah, from Australia. Yeah. So it's a trade-off. The bottom line, and I explained this on Friday, is that there's a lot of evidence that even though consumers are getting deals, human beings are losing their job. More human beings here in the U.S. are losing their jobs due to automation, e-commerce, other factors. You also have politicians, especially Democrat politicians, trying to force higher minimum wages. And guess what? When politicians try to force higher minimum wages, the restaurants and shops, they're going to automate more. There's going to be more touch screens. There's going to be less human being servers. It's going to be more touchscreens. So instead of paying a server $20 an hour, instead of paying 5 servers $20 an hour for a restaurant, there's going to be 3 servers, and there's going to be touchscreens on every table. There's always politicians trying to force, governments and politicians and central banks trying to force higher wages and prices. There's always unintended consequences. The United Auto Workers striking with General Motors is exact wrong time. General Motors is dealing with the same problems that Ford is. This is the exact wrong time to be striking. If I was managing money now, I'd probably consider buying puts on General Motors. Not financial advice, just my opinion. Out of the money puts. I know David Einhorn was long that stock, General Motors, for a while. I think he made a big profit. I could see that stock, it was at 38 or something? 2 or 3 years from now, could be more than cut in half. If the U.S. goes into a recession, one of the first things people stop doing is buying new cars. What is going to happen to the price of precious metals if the manipulation case is won? Well, Tarkinus is an excellent question. I don't think anything will immediately happen with precious metal prices, but I think the bankers, all it takes is a handful of the high-level guys to actually go to jail and not use shareholder capital for fines. And all they have to do is just prosecute a few of the big guys, a few of the upper executives, and then that will make the guys think twice about manipulating markets. So there will still be probably some manipulation, but there will be a lot less. That would be my educated guess. There would be a lot less manipulation, because if there's actually the risk of one of these bankers going to prison for 5 years and actually getting caught because they saw one of their friends go to prison for 5 or 10 years, they are going to think twice about doing it. High-level guys will never go to jail. We'll see. We'll see, because it looks like to me with these arrests with the lower and middle-level guys that they're rolling up those guys to build a case. Otherwise, why would the 2 higher-level guys be on leave now? If they weren't going to do a case, why would they have put these guys on leave? Sounds like JP Morgan was tipped that these guys are about to be indicted too. In a recession, all commodities won't go up evenly. Gold and silver will lead the way, and most of the other commodities probably will lag or not go up at all. A lot of the other commodities are based on Chinese demand, and the Chinese economy is, even if you disagree with me about China, I don't think you can disagree that the Chinese economy is slowing down. Thank you for the super chat, Alexi. I appreciate it. I have no idea why Gunlock said that. Gunlock also said, Gunlock's a billionaire. He's managing a lot of money. He's a very smart guy. He's not always right. Gunlock also said that the yield curve was steepened. And he said that, last year? He's been wrong. He said that either at the end of last year or at the beginning of this year, he predicted that the yield on the 30-year U.S. Treasury would be like 5 or 6% or something. He was totally wrong. Smart people make mistakes all the time. When you're a billionaire, you can afford to be wrong. You don't have to be right all the time to make money. Ricky says insurance for new cars is unreal even after 40 plus years of clean driving. Yeah, the price of everything, Ricky, is going up. Stagflate and tax and lie. Fiat currencies are being devalued. Price of everything's going up. When these companies have a lot of debt on their balance sheet, like Netflix and others, and Apple, okay, so Apple isn't really innovating anymore. Apple's not creating new products or services. Apple has a lot of debt on their balance sheet. Apple is doing financial engineering. Apple has a lot of cash in their balance sheet. But the way Apple's been making more money, price increases. Same thing with Netflix. Once you go to using a lot of debt for growth, with what Netflix was doing or what Apple has been doing with buying back shares and issuing bonds, you raise prices. So you're going to see higher, you're not going to see any deals out of any of those. They're going to keep raising their prices. I've talked about this with all the major central banks. Japan has been doing this longer than anyone else. No surprise. This is beggar thy neighbor. Almost exactly from the 1920s and 1930s. The same mistakes. Competitive devaluations, tariffs, trade wars, cutting interest rates to try to devalue their currency, and QE. Even the emerging markets are doing it too. And the emerging markets have to worry about net capital outflows, which is what normally, like, the death knell for a lot of emerging markets are the net capital outflows. That's normally what happens before and during a crisis for emerging markets. Yeah, the insurance companies also have to legally buy bonds, especially U.S. Treasuries here in the U.S., and they're not getting the interest payments on the Treasuries. Although the U.S. does have positive yield, they're not getting anywhere near the amount. Yeah, doesn't Portland and Oregon also have rent control? Didn't they just pass the laws, right? So if you're a rental property owner in Oregon, you just got screwed over. If your property taxes go up or your mortgage goes up, the amount of interest you have to pay, you cannot increase your rent. I believe there's now, this was passed in the last year or two, I think, rent control in Oregon, right? So if you're a rental property owner in Oregon, you're totally screwed. Yeah, if you're not familiar, people asking about Japan and the emerging markets and the policy going on, go back and research. I have articles about this. You can search beggar thy neighbor policies from the 1920s and 1930s. A lot of the same mistakes are being repeated from the 1920s and 1930s. And we know what happened shortly after that. Crazy politicians in World War II. So hopefully we will not get that, but history is quite clear what happens. The worse the economies get, all these economies get. Okay, guys, well, I'm going to go take a break. I may do another live stream show later, or I'll plan out a show for tomorrow. Thank you very much for listening to this, and thank you again to my almost 150 now Patreon account contributors and my almost a dozen monthly PayPal contributors. Thank you very much. My channel is still growing, but I think YouTube censorship algorithms have started to smash it again. I was adding 2,000 new subscribers per month, and now it's down. I think it's barely 1,000 now. So the last couple weeks, it's dropped a lot. I was hoping I would get to over 30,000 new YouTube channel subscribers, which is a little bit more than 2,000 more before my birthday in a couple weeks, but I don't think that's going to happen now with the censorship. But at least they haven't taken away all my ad revenue yet. My ad revenue is actually starting to increase a little bit again, so that's good news at least. Okay, guys, well, thank you very much for your time. If you don't have any money and can't tip once in a while, that's fine. Just hit the like button or share the video with friends and family if you like the content. I appreciate it, and I'll keep producing good work. I am going to send out some emails to book some interviews in the next couple weeks. Maybe I can get Dr. Mark Faber back on in the near future. I haven't had him on in a while, so maybe as a treat, I'll work on getting him on in the next couple weeks. We'll see if he can fit me into a schedule. Okay, bye for now.